So the next question here is, explain how balance sheets and income statements for manufacturing, merchandising, and service companies differ. Well, the main thought here is that merchandisers and manufacturers are pretty different. As merchandisers, we're buying finished goods and then selling the finished goods. So who's probably what's the best example of merchandising right now that everyone knows about, the control over 50% of online sales? It's Amazon, right? Amazon buys finished goods and then resells them to markets, resells them to us. We might be called end users. If it was software, you resell it to us, but they're already buying finished goods. They might create too. They might create Amazon products, and for that they might be manufacturing. But merchandisers buy finished goods and sell them for a markup. And so they're really about logistics, and what they're going to have on their inventory is whatever they bought the good for, and whatever they sell the good for, they're going to have as their finished goods, as their profit. And so, and they're not as nearly as complex as manufacturers. Other examples of merchandisers are a company like Walmart. Walmart, they just buy products from other companies and sell them. This is also known as resellers, right? That's more of the common term used nowadays instead of merchandisers. It's reseller. Manufacturers, however, they build the stuff. You have some people who want the complete supply chain. When you have Amazon products, that's the complete supply chain. They build the chair, Amazon chair, and then they sell it. But for manufacturers, they generally buy the raw materials and then sell to a reseller. So the manufacturers are converting that raw material, right? That direct material, that's another word for the raw material, and they're converting it using the conversion costs, the labor and the overhead. Let's see. Make sure you mute your microphones. My lecture, please. Thank you. So balance sheet. Materials waiting to be processed. So if we're making a steel frame, it could be the steel. If we're making a bike, it could be the if we're making a bike, it could be the steel frame, and so on and so forth. Raw material, it really depends on the business. So whenever you're doing anything in accounting, anything in finance, it really depends on the business. If I make steel bars, my raw material is steel. If I'm making bike frames, my raw material is the steel bar. If I'm making bikes, my raw material is the bike frame, and so on and so forth. It really takes judgment. Work in process. Once we convert raw materials, maybe we would convert the raw material of the bike frame and the raw material of the wheel and the raw material of the handle. All those, once we're starting to build them, it's something called work in process. And then once we've finished it into a bike, once it's completed, it's called a finished good. So we have these three stages on a balance sheet. We have raw materials. So that's all the raw stuff we have waiting to build. We have work in process. Those are the items that, hey, we haven't finished yet, but we're going to get it done soon. And we have finished goods where, hey, we're done with the product. We're just waiting for someone to buy it. So we'll see that here, the difference between balance sheet for services, merchandising, and manufacturing. And I like this slide because it really illustrates there's not a lot of differences. And this entire class, we're going to be focusing on really the red items. So financial accounting, we covered so much more of the balance sheet, financial statements, the income statement, the cash flow, all that fun stuff. Here, we're really drilling down into inventory. So for services, we don't have inventory. That's why I like accounting, and I like representing service companies. It makes life a lot easier because we don't have inventory. We just sell our services, or we might sell our software as a service. There is no inventory on the books. If we're a reseller or a merchandiser, as the book calls it, we just have merchandise inventory at the cost that we purchased it at, or also the lower cost of market. But we're not going to go into that as this is not a financial accounting course. And finally, for a manufacturer, we have all three. We have our raw materials, our work in process, and our finished goods. And then there's complexities there, and that's what this class is going to be going over. How do we determine our work in process at the end of a period? How do we determine our finished goods at the end of a period? How do we plan in order to make sure that we meet the demands of the marketplace appropriately? How do we manage our costs to make sure that we have enough money to meet to buy the inventory, to meet the goods, and to meet the demand of the marketplace? So all of that planning, all of the cost control, and then the financial reporting related to manufacturing is really what this course is focusing on. And through that, you're going to develop the skills of learning allocation, learning terminology used in these businesses. Okay, gonna